Hello and welcome to this week's show. Thanks so much for joining us today. I'm your host Trey Winowitz and you're watching Right on the Money. Our goal for the show is to always equip you, the viewer, with accurate financial information so you can make educated decisions for both you and your family. Now we've got a great show lined up for you today, so thanks for watching. We're going to be tackling some difficult financial questions, and we want to take some things that could be somewhat complicated and make them simple and easy to understand. So come on in and have some fun with us today.
In the aftermath of Hurricane Katrina, Trey Winowitz was forced to move himself and his family over 600 miles north and begin his financial planning practice again, from scratch. Since then, Winowitz Financial has become a national success story, establishing itself as a trusted source for financial advice in and around East Tennessee. In return, Trey gives back to the community by sponsoring monthly educational workshops and annual charity events. He also hosts a weekly radio show informing and entertaining those in need of financial advice. So, if you'd like to understand more about today's challenging financial environment, if you'd like to overcome your current financial situation, and want to learn from someone with a track record of overcoming, stay tuned for some trusted financial advice that's right on the money.
Now let's get to our main topic today. How safe is safe? You know, sometimes I hear some really interesting opinions on how people think different investments work. One of the reasons we're doing this show is to help bring clarity to how different products and strategies actually work. Because in every industry there's perception and then there's reality. I often find that depending on where someone started investing and who they've worked with in the past, people adopt their advisor's set of beliefs. Now that's okay to an extent, but my goal is for you to understand things better so you can form your own opinion about things. Once you're equipped with knowledge, then you can take that knowledge and find an advisor to work with that shares those same beliefs. When it comes to protecting your principal, you, as an investor, need to have a clear set of rules and know which questions to ask to make sure that you're putting your hard-earned money in a place that you want it to be. Now, a few weeks ago, we spent an entire episode talking about all the places you can actually invest your money. But today, we're going to zero in on a few things. Banks, bonds, not those type of bonds, and insurance companies. Now these are three options that provide safer alternatives for investing your money these days, since they fall under the safe side of the T-chart that we showed you a while back. You know, the one that we listed on 8 different investment tools? If you'll recall, there was a red side and a green side, red meaning risk and green meaning safe. Safer tools don't put your principal at risk. The question now is, how safe is safe? If you want to have some of your money in a safer place than the stock market these days, where could you put it? Well, you could choose a bank, you could buy a bond, or you could put your money with an insurance company. On today's show, we'll take a closer look at banks, bonds, and insurance companies. We're also going to talk about what makes these options safe, and then we'll examine the differences between each one. So join us on the other side of the break, and we'll talk a little bit more about the facts of keeping your money safe and protected. I'll see you in just a bit.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Thanks for joining us today at Right on the Money. I'm Trey Winowitz, and we're talking about various options for keeping your money safe and how safe are they. If you're just tuning in, please visit our website where you can watch all the TV shows as well as listen to our weekly radio shows. Now let's talk about each of these things separately so you can understand them. The first place that you can put money to protect it is in a bank. Now while most banks may have a broker or advisor working inside, the bank products that people use for safety are called CDs or certificates of deposit. The pros are they have a shorter time commitment than many things. They're FDIC insured as well. But the cons in today's market is they have a lower rate of return and a penalty for early withdrawal. Now what people don't realize is that there's more than one kind of CD out there. Don't think that the rate you're seeing in the banks is all you can get. Some CDs have safety with a little bit more potential for return. Now the CD most people think about when they think of a CD is a fixed rate or declared CD. You put your money in and the bank gives you a fixed rate of interest for a set period of time. This is the type of product that could be perfect for your situation. But there is something else out there. It's called a market-linked or indexed CD. Our clients like some of the features of these CDs because they're a blend of the safety from the FDIC, but they also offer a higher potential rate of return. This is usually tied to a basket of stocks or a market index. However, your money is never invested in the market, otherwise you'd lose your principal if the market declined. It's in a CD, but the CD has a different method of calculating interest. They give you a portion of the market's gains up to a predetermined limit called a cap. Then usually on an annual or quarterly basis, they measure the rate of return on that basket of stocks or index and credit you the interest then. Now, index CDs may be appropriate for the investor who wants the FDIC insurance of owning a CD, but would like a little bit more return or potential for return with today's historically low rates. Another place investors can put their money is a bond. Now, there's three main types of bonds. Number one is a savings bond. This offers a fixed rate of interest over a period of time, and many people find these attractive because they're not subject to state or local income tax. They can't easily, though, be transferred and are non-negotiable. The second type of bond is a corporate bond, a debt security issued by a corporation and then sold to investors. The backing for this bond is the payment or the ability of the company, which is typically money to be earned from future operations. In some cases, the company's physical assets may be used as collateral for those bonds. Third and finally is a municipal bond, a debt security issued by a state, municipality, or county to finance capital expenditures. These bonds are exempt from federal income tax and from most state and local taxes as well, especially if you live in the state that the bond's issued. Now here are the pros and cons of bonds. The pros are they pay higher interest rates generally than bank products. The principal's also returned at maturity. The cons, however, is they generally have longer periods of time to leave your money in than banks. They could lose value due to interest rates, and there's no protection if the issuer goes out of business. The main thing to remember about corporate bonds and municipals is although they don't have stock market risk, they do have other types of risk: interest rate risk, credit risk, and liquidity risk. On the other side of the break, we'll go over how some insurance company products work and how they can be used to help you get a reasonable return in today's unreasonable market. I'll see you in just a second.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Thanks for joining us today at Right on the Money. I'm Trey Winowitz, and we're talking about various options for keeping your money safe. How safe are they? If you're just tuning in, go to our website and you can watch the whole show as well as listen to any of our radio shows. Now today we've already talked about banks and bonds, but now I want to turn our attention to insurance companies. To be honest, a lot of people who come into the office have some big misconceptions about insurance companies and their products. Just like any other type of account, there are good ones and bad ones. You need to meet with a qualified financial professional, preferably one that's independent and members of the National Ethics Bureau and the Better Business Bureau to give you the best chance of accurate information. Every single week we help people just like you understand products that they have or evaluate the purchase of new products that better suit their needs. Let me know if I can help you do that. I'd love to be on your financial team. Now, similar to banks, insurance companies sell products with principal risk like mutual funds, variable annuities, and other products. But today we're going to focus on one of their more protected products, very similar to the bank platform. Insurance companies sell two types of time deposits, but with an insurance company they're called annuities. This is because at some point you could choose to take an income from these accounts. Now, contrary to maybe what some people are told, you don't have to take an income from an annuity. Many clients, ours as well as others, use them as principal protected accumulation vehicles for their money. There are two main types of safer products that insurance companies sell. They mirror the bank platform. They have number one, fixed annuities, which are time deposits with a stated rate of interest. The second product is an indexed or market-linked annuity. These are time deposits with an interest calculation that's tied to a market index. They have caps or maximum gains like the market-linked CDs, but in turn, the investor can't lose any of their principal or interest earned. The Wharton School of Finance has a great white paper about these that detail the benefits and the historical charts on these accounts. The bottom line on the findings is, if you want to have a good one, you can produce safer returns in the range of 4 to 6% and keep your principal safe. So if you're looking for a reasonable return with principal protection, this could make sense for a portion of your money. Now there are many other factors that come into consideration when choosing a specific product. We don't really have time to cover them all today, but you would want to meet with me or another advisor on an individual basis to see if they might make sense for you. One huge resource that our clients use is our annuity fee sheet. This is what I use all the time to find out hidden costs that you may not know that you're paying. If you own an annuity product out there and you didn't buy it from me, you may want to come sit down with me and review your current product with our annuity fee sheet. We'll help you learn if you could find that product for cheaper and if there's a more efficient way to have your money invested. You may be surprised. Now today's bottom line, there are three main places that you can put your money to protect it: banks, bonds, and insurance companies. With any investment, however, there are pros and cons to each. But with the stock market going up and down, it may not be a bad time to sit down and explore some of these more protected options. Make sure you're working with someone independent and preferably one that's a member of the National Ethics Bureau and the Better Business Bureau so you can get an honest, objective opinion. Not one of these investments that we've discussed today is the ultimate solution, but they all could be a part of a well-balanced plan that would also protect you when the market's going down. Now, coming up next, learn about people just like you who've benefited from a no-cost second opinion. You won't want to miss our Money Matters segment.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety. Call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Now that we're back, I'd like to tell you about some real-life folks that you may can relate to, because it never hurts to have an extra pair of objective eyes take a look at your situation and see what can be improved. Even if strategies that you're using can't be improved on, sometimes people say it's a huge comfort when I tell them that what they're doing is working well, or maybe they should continue on the same path. However, in some cases, we discover that some of the products or strategies they thought worked in a certain way actually don't. And sometimes not getting a second opinion can be very costly. If you want to be a part of this Money Matters segment, please give us a call at the office for a complimentary review. As you'll see, everything's kept confidential, but your situation may help some of our other viewers secure their financial future. So give me a call and maybe your case will get picked for the show. I want to take a second to introduce you to a few people who came in the office recently for a no-obligation second opinion, just to be sure. And these people were glad that they did. So let's take a look at this week's case. Hey, Janet, can you bring me my notes? Thanks. All right. Today's case study comes from Jefferson City, Tennessee. The husband is 57, works in a factory, and the wife is 55 years old and is a realtor. They came in after listening to our radio show and then coming to one of our monthly educational workshops. Their main concerns: they wanted to review their current life insurance. They have a couple of kids, one of them still in high school and the other two are in college. They also have been trying to get their home paid off in the next 10 years, so they were looking to see if their current plan was efficient, if they could do that in a little bit better way, had been hearing different things about refinancing, and that was a big concern to them. Also, they wanted a fee analysis. They'd been working with the same brokerage firm for a number of years, weren't really sure how they got paid, what they were being paid, or if they were in any efficient accounts, or if they could do that a little bit better. Steps to success. We were able to analyze their current insurance policy. We did look around in some different areas with some different A-rated carriers to see if we could get them a better deal. Then we got them a meeting with our trusted in-house mortgage professional. By the way, if you choose to use our mortgage professional that we trust, you get a friends and family discount on the closing cost. But we got them a rate analysis and compared what they were currently doing to some other options. Then we sent their statements off to some of our analysts to see if there was any fees that were undisclosed or anything that they didn't know about. The results: we were able to shop and find some life insurance policies for the husband. Ended up saving them some premiums of about $50 a month and keeping their coverage exactly the same. After meeting with the mortgage professional, we were able to help them find a refinance option that helped them pay their house off in about 5 years sooner at no cost to them. And then we did a complimentary portfolio analysis for them. We helped them find some other accounts that had less fees and also reposition some of their accounts to a manager who in the last 5 or 6 years had had a proven track record of avoiding some of these big downturns in the market. So after all that, they were very, very pleased. Give us a call today for a complimentary review, and if your scenario gets picked for the show, you're going to receive a right-on-the-money prize pack. But most of all, we want to help you. Coming up next, another opportunity for you to be a part of the show. Post it on our Facebook, tweet us, or email us your financial questions, and stick around for the viewer mail section.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With Principal Protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Welcome back to Right on the Money. I'm your host, Trey Winowitz, and it's time for you, the viewer, to be an integral part of this show, Viewer Mail. This is the part of the show where you send us your questions about anything financial. In order to get your questions to me, you can post them on our Facebook page, tweet your question to me at TreyWTV, or email them to me at advice@TreyWTV. If your question happens to get answered for the show, you'll receive a Right on the Money prize pack just for your willingness to help out our other viewers. This package has a retail value of over $50, so please don't stop sending us those questions. Our first viewer mail question today is, now that my spouse has passed away, what do I do with his life insurance policy payout? Should I use it to pay off my mortgage or to invest? You know, that's a question I get a lot in the office. We frequently work with surviving spouses and people who are recently divorced for that matter. And it really depends on your personal situation. There's a variety of other variables that you need to consider in order to make the best financial decision possible. Some of those are budgetary constraints or income needs. Also, you want to consider your age and what rate you're currently paying on your mortgage, as well as how the mortgage is set up. I have a mortgage company inside my office that can help us sort through this decision with you. Paying debt off is never a bad idea. However, combining it with a financial plan sometimes can give you a great strategy and help you for years to come. Give us a call at the office, and I'll also send you a complimentary DVD, just like we did for the recently divorced and widows, along with a checklist to help you out. Thanks for that question, and I look forward to helping you. And our next question is, what is the difference between a living will and a regular will? Well, since I'm not an attorney, I wanted to source this answer for you, but it is pretty simple. You want to always talk with a qualified professional before making any legal decisions. But a will is the most important document in your estate plan because it states who will inherit your assets. Without a will, state law then determines your inheritance. A living will is the best known medical directive document. This type of will states that in certain circumstances, you prefer certain types of care. So be sure to sit down with a qualified legal professional and find out what's appropriate for you. The last question we have time for today is this. My husband of 30 years recently passed away, and I no longer have an income since I've been a housewife all this time. Should I consider a reverse mortgage in order to help pay my monthly bills? You know, that's a great question, and we spend an entire show dealing with that, the fact versus fiction of reverse mortgages. Like most financial decisions, there's many factors to consider. Since we see many people just like you seeking advice on reverse mortgages as well as regular mortgages, we put a mortgage company in the office. I'm not in the mortgage business, however, I do know a lot about it and work closely with an independent mortgage broker. He's a personal friend of mine and been in the business for over 12 years, and he would be the best person, in my opinion, to answer some specific questions concerning your situation. But to generalize, I definitely would consider it as an option. It may turn out to be the best thing, or it could turn out not to be. The only one way to find out is to sit down and talk through it together. Give my office a call, and we can sit down and discuss it at a convenient time for you. And when you call, tell them that we want to send you the complimentary DVD of the Reverse Mortgage Show and the Widow's Checklist. I'd love to help you and look forward to meeting you.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
And we're back. This is Right on the Money, and I'm Trey Winowitz. We're just getting ready to wrap up the show, but before we go, I'd like to tell you about an old Louisiana tradition called lagniappe. Lagniappe means to give someone a little something extra, and the way that we want to do that here at Right on the Money is to brighten your day at the end of our show. So with that, here's a little lagniappe for you. 3 guys decide to play a round of golf. One's a priest, one's a psychologist, and one's an economist. They get behind a very slow twosome who, despite their caddy, are taking all day to line up their shots and 4-putting every green. By the 8th hole, the 3 men are complaining loudly about the slow play ahead, swearing up and down and on a blue streak. The priest says, "Holy Mary, I pray that they should take some lessons before they play again." The psychologist says, "Man, I swear, there's people that play like, I didn't know there's people that play golf so slowly." The economist says, "Man, I really didn't expect to spend this much time playing a round of golf." By the 9th hole, they've had it with the slow play. So the psychologist goes up to the caddy and demands that they're allowed to play through. Caddy says, "Okay," but then he explains to him that the 2 golfers are both blind, retired firemen who lost their eyesight saving people in a fire, and that's why they're playing so slow. Also, he says, "Look, could you please not swear or complain so loud?" The priest was mortified. He says, "Hey, I'm a man of the cloth. I've been swearing at the slow play of 2 blind men." The psychologist was mortified. He says, "Here I am trained to help others with their problems, and I've been complaining about the slow play of 2 blind guys." And the economist ponders for a moment and thinks about it. Then he finally goes back to the caddy and says this, "Listen, next time, couldn't you just let the guys play at night?" And that, my friends, is your little lagniappe for today. That's pretty terrible. I want to personally thank you for watching our show today. I hope you found our show helpful as well as a little bit entertaining. If there's anything at all I can help you with financially, please don't hesitate to call our office. And remember, any plan that we come up with will always have 3 main goals for your money. Safety first, or protection of your principal, is always number 1. Making a reasonable return on your money in what some would consider an unreasonable market. And number 3, keeping your plans simple and easy to understand. If that sounds like something you want, I know I can help you. Also, please keep the financial questions coming. We'll do our best to get them answered on the show. I'll see you next week at 3 o'clock for more trusted advice that's right on the money.